Hi everyone, today let's talk about some market perspective and we'll learn about the CAPE ratio and future potential returns. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So let's look at market perspective. They say the excess CAPE ratio measures how attractive stocks are compared to bonds in their different real yields. So let's learn about it. In terms of factors you should be looking at, inflation versus bonds actually getting those real yields. And they do mention here President Trump is looking at 10% minimum tariffs on all imports, 60% coming from China. Obviously, those are going to impact corporate earnings and could potentially drive up inflation, which has implications for the economy and asset valuations, potentially putting that pause on interest rates or potentially even reversing them, they say here. I'm not sure I fully agree with that, but they say it is a risk. And then the other thing, like we talked about, the CAPE, or the excess cyclically adjusted price to earnings yield. It's basically a price to earnings ratio, but it is smoothed for the business cycle and it also is adjusted for inflation. And then you have the excess CAPE yield, which is the 1 over the CAPE. And essentially this is going to give you the attractiveness of stocks compared to bonds, examining those real yields. So let's look at it. Also, they have a link here. I'll put that in the description. And they say here, historically, the higher the excess CAPE has been, the better returns for stocks relative to bonds over the next decade, or the inverse is true. So the lower the CAPE, the better return for bonds. Right now, the CAPE is quite low. You can see here in that zero range .com bubble, very, very low, ended up being a very strong return for bonds. And I've been saying this for a long time. I think the return for bonds is going to be better than stocks. I've been saying it, buy bonds. In my opinion, I've been buying bonds, or at the very least, buy equities that have good yields, like covered call ETFs or real estate investment trusts. Things of that nature are going to perform better than the broader market, in my opinion. Again, that is my opinion, and this is another data point that points to that same thesis. So looking at fear and greed, a week ago we were at a 62 and now we are at a 51. Midweek we did jump into the 67, 68 area here on 11 November, and since then we've pulled back. You can also see lower high setup here on fear and greed. So continues to look bearish, neutral on momentum, extreme fear on strength and breadth. So not as far to fall in this next move, in my opinion. We did have that kind of dip low just because these metrics are already getting into extreme fear. So maybe we see some bounces. Put call ratio got extremely low. Again, telling you that that was a topping pattern, and sure enough, it did. So we're back into the 0.7 area. Usually this gets into the 0.8 area before we kind of see a topping out there. So expecting this to go a little bit higher, volatility spiking up, probably going to hit the SMA at least. And we'll look at that on the charts later as well. And then safe haven demand trending lower into greed, probably going to get into fear at least below that zero line. Once you get below the zero, it depends on how low you're going to go, but that tends to be where you're looking. And I would expect it to get there this time at least. And then junk bonds, really no movement here. This really hasn't been a super great metric, but either way, extreme greed there, not giving us a whole lot of information. Moving over to the AAII survey, we saw a big push in bullishness. Obviously, this was before the Friday downturn, but this was on the Thursday, which was also slightly negative. So we did hit another peak bullishness, a big spike from the 41 and the 39 before it, big spike into territory where you generally top out. 52 is your 1 year high, and usually you don't get above that. So pretty interesting. Makes sense that we did see a bit of a downturn. Bears were pretty depressed at the 28 level, pretty in line with historical averages, but the neutral was getting squeezed. But the big factor here was that big bullishness, resulting in a topping in markets as a contrarian metric. Moving over to seasonality, this has been in line with the move, so this is what we expected. We did expect the move lower into the Friday, and it's actually supposed to get worse here into the Monday, Tuesday, all the way up until the Thursday, which is supposed to be the lowest of the month before we start to see some kind of Santa Claus rally, if we're going to get it, which would kind of predicate a higher low setup in markets, a continuation of the trend. And I certainly think that that is absolutely possible. But for now, short-term bearish up until that kind of mid to end of the week. And then looking at the calendar, you can see we did finish up that third week options expiration. Could have potentially been triggering that move down that we saw on the Friday. And then you can see Thanksgiving week, not a whole lot here historically. And then looking at the Thanksgiving trading week, the week prior, typically down 6 of the last 7, 2.2%. So typically bearish during this time period. You can see a slight bull there on the Friday. Just like we looked at on the charts, the 21st was the low with the majority of the data. And then the next week, bull into the Thursday, Thanksgiving, last trading day of the year, typically last trading day of the week, shortened day, down 16 of the last 26. So mixed trading on that Friday, but bearishness this week, bullish Friday through the Wednesday. We'll see if it plays out. Moving over to the earnings calendar, there is still a little bit left here. You got Walmart, Lowe's, Medtronic, Dollar Tree, NVDA, obviously going to be the absolutely massive one. $3.48 trillion market cap. They absolutely need to deliver. And this is concerning because we've definitely seen some weakness in semiconductors recently. NVIDIA has been kind of hovering for a bit going into their earnings. My guess is they underperform just a little bit and we see a small decline. I don't think it's going to be a dumpster fire. I think they're going to still perform well, as this is still a big market leader and they continue to deliver on earnings. But I don't think we're going to see a major spike up or really any kind of gains. I would expect a little bit of weakness, honestly, from their earnings, but we'll see. And then we have Target, Intuit, John Deere Company, and that'll pretty much wrap it up for this week and the earnings season as a whole. Moving over to the economic calendar here, you can see we do get CPI data for the Eurozone, pretty much it for the Tuesday, nothing really going for the Monday. Wednesday, not much either, 20-year bond auction. Want to see how that plays out for TLT. Fed says maybe not cuts, kind of a 50-50 there, so we'll see how that plays out. It's still sitting in the 4.5 range. Honestly, it probably needs to be a little bit higher than that, or at least hovering in that zone. I wouldn't expect a huge move. And then looking at Thursday, existing home sales, Fed balance sheet, 10-year tips, all the way down at 1.59, pretty low levels there. Initial jobless claims continuing to hover in that kind of same region they've been in. And then for Friday, you do get some economic data, composite PMI, manufacturing PMI, Michigan data, really not a whole lot of economic data this week. Forgot to mention Philly Fed here for the Thursday, fairly interesting. But overall, pretty light data week. Moving over to Max Payne for next Friday, you can see current stock price $5.85, and you can see Max Payne sitting up at $5.95. So we're actually should be drifting a little bit to the bull side. And we did talk about it. The Friday was much lower than the current price when we talked about it. And it did go much lower into that level, but all of next week, green all the way up through really the Thanksgiving time period here. The day after Thanksgiving is bearish, so that fits with the thesis we were just talking about, but bullish through that time period. We'll see how that plays out. After the dips on Friday, I talked about sideways choppy action, which does fit with this thesis, maybe even a slight retracement higher. So we'll see how it plays out. Right now, a little bit of bullishness, but understand there's probably not a ton of options behind this market, at least for right now. Moving over to the charts, looking at the SPX here, you can see we're still in this channel, still very much bullish, definitely extended, well off of those 144s. You can see your medium-term support is all the way down here, about 30% lower from current price. That is not a great metric. You can see here, usually when we get that high, this was 33% off of that level, ended up resulting in that bigger move back down into that consolidation. Same here, 28, 29, got sideways choppy action and then pulled back into here. So extension, definitely, and usually that results in a return to normalcy eventually. You can see it here as well, off of that 200, 27%. It's just about as high as it goes, and then you see those bigger pullbacks into a more normalized condition. So something to consider there. We're definitely extended off those medium time frames on the weekly charts, and now you can see we're still at this zone of resistance. We're still positive from 2 weeks ago, up 4.6, only down 2% on the SPY. I would expect a little bit more movement down here into your trends. That's about 1.33% down. We'll see if we get this kind of sideways choppy action into the support here. Doesn't mean that's going to happen immediately. These moves tend to take a long time. You can see from top to bottom, this took about 40 weeks to get back to that 200. So that is a long period of time, but we're definitely extended in the short term. RSI breaking down, momentum stepping down. Everything says this is still a topping pattern. Looking at it on the daily chart, you can see big rally up. Are we going to get the higher low off of that 21-day moving average? That's at 580.60. And then looking at it here on the SPY, you can see the level 585.91. We closed just barely below it, but we did pull back to that level. 21 VWAP all still holding his support at 584.45. Momentum bearish, RSI bearish, big volume. If it pulls back to the 55 EMA, that would give you another 2% lower into that zone. That is where we ended up pulling back and finding support here. That would give you 574.70. I would guess this will kind of trend up over the next day or two into this zone, hold that higher low, and then push if it's going to do it. But like I said on the weekly, this is probably the top. Maybe we get a left shoulder head, right shoulder, lower high setup up around that 585 area after dipping to the neckline, kind of like this move, and then a continuation lower. Certainly a possibility. Same thesis here on extension. You can see about 12%, 12.5%. Down to that 200. Currently, that's at about 10, 10.1, 10.2, somewhere in there. So not quite as extended, but definitely in that same level of extension where you start to see bigger pullbacks start to hit those levels. And from top to bottom, if we did pull back to that 144, that's about an 8% move. So we would be in the early stages of that style of move if it did culminate that way. And then moving over to the weekly chart here on the Tasty charts, you can see we got very close to that upper band. I thought we would wick it this week. We ended up just pulling basically straight back, sideways consolidation, and then the fall into the Thursday, Friday. Momentum stepping down, no volume. Really haven't seen volume since the spike up here, but we've been grinding. I would at least expect a test of that 8 EMA based on this down move, which would put you down into the 879.45 level. That's about another slightly more than 1% down move on the weekly chart. And then looking at that daily chart, you got the ATR trailing stop sitting at that 579.63. So right in that same region, we're hitting in the middle of the range. Still bullish conditions. You can see the volume spike on that last day of the week. So I would expect a little bit more move, touch in this area, maybe sideways consolidation in here. Then we'll see if we get that higher low setup. This previous down move hit those ATRs, and then we saw the spike up. So we'll see if it comes into here, finds that higher low, and then pushes. Also, that previous support was the 55 EMA, just like we talked about on the daily chart. That's at 574.90. So again, a 1.25% down move or so. Hit those higher lows and then rally if it's going to do it. And these ATR bands have been pretty good indicators. You can see we hit that upper band. We talked about it here. We expected this kind of reversal, and sure enough, that is how it played out. 5 days in a row of bearishness off of that level. Moving over to the weekly chart here for the NASDAQ, you can see the big down candle, 3.4%, came into the zone of support at 20,277. The low of the week was 20,315, so we did miss it barely. 9 EMA in that same area, 20,258. So right in there, momentum bearish, RSI bearish. We'll see if it rejects from here or not. Technically, higher high, especially with this dip low, double bottom, rally up, higher high. So we'll see if it holds in here. If it does, we should see a push back into the 21,300 area. That would be nice. That would give you another 5% or so, 5.5% of upside over the next 2 to 3 weeks potentially. So we'll see how that plays out. In terms of this structure here, it doesn't look nearly as good with a kind of breakdown, grinding action, rejection off of this trend. Support still in here, 19,734, right in that 21 VWAP area. Highly traded zone also right in there, 19,800, momentum stepping down, RSI stepping down, volume still not great. Big volume on that down candle, really over the last couple candles. Again, still positive over 2 weeks, 5.4 to the upside, 3.4 to the downside, still unchanged really from the 14 October week in terms of price action, still holding on top of these highs. So still possible that we do hold those levels. And then looking at it here on the Qs on the daily chart, you can see 5 days in a row of bearish, broke the 21, broke VWAP, probably headed towards that 55 EMA. If we do get that move, that's about another 1.5, 1.6% lower. That was the support here previously. Coming to this zone, once again, momentum bearish, huge volume on the Qs, huge selling, 2.3% on that candle. And in terms of levels, you're kind of in no man's land, right in the middle of this trading range, looking for the gap fill down to that 492 level at this point. Doesn't mean that we can't get a little bit of sideways consolidation, because we are definitely extended. We are extended to the upside, consolidation, fall, extended to the downside, consolidation, still might see a little bit more fall, touch those levels, fill those gaps, and then rally if it's going to do it. Either way, about 1.5% of downside potential, and then if it rallies up, there's about 3, maybe 4.5% upside back into these levels, get that kind of double top pattern topping over there. Then we'll see what happens from there. So a couple of scenarios, could see a little bit lower move, higher low setup. Then we'll see if we get that either double top or lower high. Maybe we hit these trends and reject from there. The other thing I wanted to highlight here was that extension, just like we talked about on the previous SPY charts. You can see we were about 29% off of that 200 area, very, very high levels. And going back here to this previous high in November of 21, That was also 36.5, so a little bit more extended here before we started to see that fall. But off of that all-time high there, 28.9, nearly 29%. So not quite as extended as that previous, but definitely extended. And I would say the risk is to the downside where we start to see this tumble back and get a return to that more normalized condition, which would take you all the way down into the 368, 369 area. Looking at the Tasty charts here for the NASDAQ, you can see we did miss that upper ATR band. The previous rallies up hit that upper ATR band. This one, we couldn't even quite get to that second one. Momentum barely flipped to bullish, and then we pulled back right to that 8 EMA. So structurally, 8-week EMA still holding up. 492.83, just above the 492 level that we talked about on the previous charts. ATR trailing stops all the way down at 449.55. You can see this previous move down did hit that ATR trailing stop. So if we did see that pullback, that's about $50 or so of downside to get into that range at 449.50. Definitely some concern on this kind of a move were definitely extended, just like we talked about. And then looking at the daily chart here, you can see we did get that volume spike. Sometimes on these kind of accelerated down moves, you can get a volume spike at the end of it, and that kind of signals that the move is starting to culminate, just like this here. So you get this big down move, volume spikes as it's happening, and then you get a massive dip low, huge volume spike on that, and that's when you start to see the rally out, and then that kind of continuation higher. So something to consider there. You could argue that this is kind of mid-move still, probably headed back into these areas here around 480, 481, down at that 89 EMA, certainly a possibility, but occasionally you do see these kind of moves. So like this one here, relatively bigger move down considering this uptrend that we've been in, did get a bit of volume there, consolidation, bigger move up. So both of those, certainly a possibility. That's why you do have to be cautious and you do have to pay attention to these levels. As they start to break, are you getting volume spikes? As you come into zones of support, are you getting volume spikes? And then what happens to price action after that? So for right now, I would say a little bit of continuation, probably. I just don't think this is enough of a pullback to say this is probably done, but we are starting to get those volume spikes, and it's not impossible we see a consolidation rally up just like this style move here. Moving over to the Russell here on the weekly chart, just want to remind you markets do go up over time, but taking a look at it, you can see some of these drawdowns are massive. 26% there, this was COVID, that was about 40%. And now here we are looking at the up week of 8.7 down 4, so we're still positive. It was a rough week for sure, but we do have still a very bullish structure on the weekly chart. Your 9 EMA sitting at 223, 223.60, so right in here the trend line is at 225.96. So 226 really. Momentum, not nearly as clean as some of these other charts. It's been really, really choppy. But we're here at the SMA. If it's going to bounce, you'd like to see it do it here, just like this, where you come into the zone, bounce up. Doesn't mean that you're going to go up forever. Can absolutely get a move down afterwards, but generally you do catch a little bit of a bounce. So we'll see how that plays. Right now, looking for that higher low setup at the 226 level based on trends. And then looking at that daily chart here, you can see the 4 days in a row, very consistent down to VWAP. VWAP is what you would like to see hold, 21 EMA in there as well. At 226.67, my level 226.02, the trend right in that same area. So wouldn't shock me to get a touch of there, maybe overthrow it a little bit into these levels. The gap fill is at 224.23, so maybe we swing down, catch the gap fill in here, overthrow these a little bit, fill the gaps, and then we kind of get a continuation higher. Momentum very much rolling to bearish, RSI very much rolling to bearish, so a little bit more down move. That's what we're looking for. Hold that higher low and then hopefully get a continuation off of that. And then looking at the Tasty charts here, you can see the big up move, very similar to this move actually here in July. Big up move, big down move, held the higher low, got the continuation higher, same move here. Big up move, big down move, looking for that higher low, continuation here. Doesn't mean this can't fall a little bit lower. You can see it was a huge gap down and then we rallied higher. I don't know if we're going to see that same style move, but for now you should expect a little bit more downside. 8 EMA 224.66, right in line with that gap fill that we talked about. And then looking at the daily chart, you can see major extension, expected the pullback. We got it. We're back into the middle of the range. We're right at the 21-day moving average, 228.42. And now you can see ATR trailing stop. That's going to be interesting, 227.50. Still in bullish conditions here on the Russell. Is it going to hold here and bounce? Hard to say. You can see there's been a fair amount of volume, big volume on the gap higher, obviously, but then We'll see if it holds in here. Still bullish conditions. Interesting to see that bullish condition, which the other charts do not have. Moving over to the Dow here, you can see again 4.68 to the upside, down 1.2. So it held most of the gains. The level right now is 432.78. That is the high here from the 21 October week. We'll see if it holds that higher low or if it cuts through this area back down to the 9 EMA at 426.87, and then my level 426.20 right in that same zone. VWAP hanging out below it. That's what was the support here previously at 418.36, and now that's sitting in there at 421.48. We'll see if it holds that higher low. Momentum stepping down, RSI stepping down. Didn't see a huge volume spike on the Dow, which is interesting. And then looking at that daily chart here just for a moment, you can see the level below the 9, looking for VWAP on the daily at 430.17, right inside that trend area, 21 EMA in there as well, 429.15. So expect a little bit more pullbacks, hit this area here, and then we'll see what happens. Momentum still bearish, and then looking at the RSI right at it. If it's going to bounce, it's probably going to do it here. Otherwise, we're probably going to see an overthrow and a retest. Continuation lower. Then moving over to the equal weighted S&Ps, you can see this is very similar to the Dow, same structure, up 4.3, down 1.7, still holding most of those gains. It did fall below this previous low here, so maybe a little bit weaker. The level now is 179.94. We'll see if that holds. 9 EMA, 179.58, overthrow it slightly, momentum stepping down, RSI stepping down. And then really the same thesis as everything else, very, very extended. You can see we're about 21.5% from the 200 to that upper level. Right now we're sitting closer to 19. Just out of curiosity, this previous top here, consolidation dip, we were about 37%, so far more extended off of this rally out of the COVID era. So not super extended, but definitely not close to that normalized condition or mean condition really. And at this point, you should look for that kind of mean reversion style trade back into this area, and then we'll see that continuation style. Similar to this move here where you just get extended. That was about 15%, pulled back into that zone, rallied back from that area. So we'll see how it plays out. Right now, still bullish in the short term. Looking for that higher low setup, but a little bit further to fall in my opinion. Moving over to the ratios, looking at the SPY Russell and the NASDAQ SPY, you can see the SPY did outperform. We did get a slight continuation to a slightly lower low at 2.46, but then we ended up bouncing back into this range, broke the 252 level. So Russell underperformed a little bit. Similarly here on the NASDAQ, we got a little bit of underperformance as well. Big move down 1.37. So the SPY was the best on the board. NASDAQ falling, probably going to hit that 343 level once again. A little bit of a lower low here coming off of the breakdown retest. We've had a couple of retests, probably going to sell here. Momentum stepping back to bearish, RSI right at the SMA. If it's going to break, it's probably going to do it here. You can see that right here. Similarly, on the SPY Russell, breakdown, retest, continuation lower potentially. Maybe this Russell does start to outperform in a couple of weeks, but realistically I would expect some continuation higher here. So SPY best on the board makes sense. The SPY is usually the best when markets are falling, and it seems like that's probably what we're going to see here, at least for the first couple trading days. Moving over to the SPY divided by the M2 money supply, you can see we did almost touch that 28.50 level. Came up just a little bit short. We thought we would touch it, and we got very close. The high of the week was 28.44. 28.50 was the level. Let's go ahead and extend out some of these trends here. Pull back to the trend would put you at 27.40. So again, a little bit more downside to go in my opinion. We'll see how it plays out. Momentum stepping down, RSI stepping down, at least in this trend zone is what I'm looking for. So higher low off of this low here, but still a little bit of downside potential into this area and these trends. And then if this area breaks, that 21 EMA is sitting down there at 26.75. So a little bit of bearishness, definitely higher low setup, still potentially possible here. Remember, this is the weekly chart, so it could take a little while to get there. Moving over to the Mag 7 here on the weekly chart, you can see, again, still very much an uptrend, but we did have a pullback week, nearly 3% down, right to this high of the wick from the 8 July candle. The level was 290.65. We did close technically below it, but really right on top of it, right in that same trading range. You can see we wicked the high from the 28 October week as well, and then bounced a little bit from there. Momentum stepping down, still just barely above the RSI SMA, but is it going to break through there? Probably going to hit that 9 EMA at least at 282.97. My level 283.46, just above the level. It'll probably trend up to that level next week. So little bit more selling. And from here to there, that's about 2.25% lower. Moving over to Apple and Microsoft. Apple has been consolidating for a long time. We are in the same price action we've been in since 1 July, sideways choppy. Definitely some swings in there, but we are still in the same area, and it was basically unchanged for a weekly candle. 0.86 to the downside. Momentum and RSI are still bearish. We're right on top of that 21 EMA, 224.89. Closing price was 225, so right on top of it. But below the 9, below VWAP, momentum, like I said, should carry this a little bit lower. Current support, if that 224 level breaks, is going to be 217.62. If we break to here, I would expect a little bit of a bounce, a higher low, a lower high setup, and then a continuation down to this trend line, which is currently sitting around the 213.20 area. And then looking at Microsoft here, down week 1.78. We've been watching this as a bearish structure, but it's holding out really, really well on the weekly chart. Still stuck between the 21 EMA, cannot get above it. That is at 424.48, and the 55 EMA at 409.92. Once we get below that 55, I think this is going to be a big sell. It's just taking a very, very long time for that 55 to catch up. Consolidation, distribution, 55 catching up. We're going to see a consolidation of those EMAs, and then it's going to dip below it, in my opinion, and then we're going to see that bigger sell-off into this mean reversion style trade back down into this 313 to 328 area, 55 EMA, 144 EMA, 200 SMA, something like this, where you just get those big sell-offs into that range, 30 to 35% sells, and then you can get those bigger 100% style moves to the upside. I think that's what we're going to see, but for now, we're still waiting for that 55 EMA to break. That is your current support. If you want to trade this consolidation range, your buy price would be 409.92. Hold that area. Look for the test of the 21, sell there at 424.48. Moving over to Tesla and NVIDIA. Tesla was down only 0.16 on the week. Tesla holding up very, very well. The low of the week was 309.22. The support right now, 313.80. Got a much higher high. Ended up rejecting from this trend line, but for now, momentum still bullish, not quite overbought yet. Maybe we do pull back a little bit more to the trend here, 302.30. Let's kind of give you a little bit more context here. You can see the structure that we've been in. Huge swing up, established this very high trend line, grinding price action on this lower one, big push to here. Could see another kind of continuation lower like we did off of that very powerful earnings push, kind of consolidation lower, higher low setup, and then continuation higher, certainly a possibility. But maybe we hold in a little bit better. Still, again, coming off of that 29% up week. We are a little bit extended. And this actually does kind of look very similar to this here. You can see big up week, doji candle, very slight down move, and then we kind of get that sell off. That's also a possibility. So Tesla right at the top of the range. Risk is certainly to the downside. And then looking at NVIDIA, been rallying, been in this same channel it's been in. Very tight range on this channel. You can see hits the upper level, hits the level again, pulls right back to the lower channel. That's where we closed almost to the penny there, 141.86. Based on this, we should get that continuation here back to this upper channel. That would be 155, a new all-time high there, but momentum stepping down, RSI stepping down. We'll see if it has the momentum to continue this kind of choppy price action. It is going higher, but very, very slightly on each of these candles, and you can see we didn't get there this last week. Similar to this one, but you can see the next week was a very powerful up move. So we'll see NVIDIA right at that level, waiting to see if it can hold. If you're going to trade it, 140.76 would be the current stop for me. If it closes below that level, get out. If it holds above that level, look for that up move. Moving over to Amazon and Alphabet. Amazon was down 2.68, wicked that all-time high from the previous week, established a new all-time high at 215.90. I'm going to leave this level though, 220.25. Still haven't closed above it. We're still in this range here. Did test support at $200.55. We'll see if it breaks through there, hits this trend. This has been a really steep run to that new all-time high. Amazon had good earnings, so strong catalyst. I would expect the higher low continuation, momentum still bullish. RSI looking for that retest of the SMA, still turning up here. Amazon looks good. And then looking at Alphabet, similar thesis, but not as strong. You can see we're still off of those all-time highs, but we did have a nice test of the trend here. Rally up, good earnings, strong week, 4.18. Pulled back here, 3.32, but we're still holding some of those gains. Current support 170.95. might pull all the way back to here, but momentum slightly bullish. And then basically the same as Amazon here on the RSI, looking for a test of that SMA, hold the trend, continuation up. If it does it, higher low setup, continuation higher, still to come in my opinion. I still like this and I still think it'll go. Moving over to staples and discretionary. Staples falling 1%, coming off of that trend line. So this continues to be in the same trading range. And then discretionary is down 0.78. So actually held up a little bit better. Interesting. Wicked a new all-time high there at 220.39. Probably going to add a level there. We'll see if it's worth it. Probably going to pull back a little bit more. Again, very, very extended. Just to give you some context here as well, you can see off of that 200, we got all the way up to 20.5% to the upside. Very, very extended. And then for context, you can see this previous peak off of the 200. That was 52%, so that was very, very extended as well. So just something to consider. Does feel extended in my opinion, but very strong candle the week prior. Is it going to hold up? Certainly a possibility. I would still expect some lower lows to come in the short term. 210.43 is your current support. 215.06 was the level that I added last week off of that candle. And then looking at staples, 79.90 is your support. If that breaks, lower trend is here, all the way down at 78.70 or so. Let's go ahead and extend that out right there. So that would give you about 78.72. And then my level here is 78.88, just a little bit above it. We'll see if it holds. If we do get this kind of sideways grindy price action, maybe this holds up here and then we start to see a kind of breakout on a bull flag type setup. Still looks like a bull flag, but this is a lot of candles in this kind of down channel. So we'll see how it plays out. Need to see it kind of hold in here, 79.90. Moving over to oil and gas and semis. It's been a long time since we've looked at semis, but let's see what they're doing. Oil and gas first, up 0.59, still cannot close above that 40.88 level. Ended up closing just below it by 3 pennies. Same level here, same level back in August. Still cannot get there. Need to see it close above that level and push to 145. I think it'll do it. But right now we're still in this same trading range. The low of the range is 128. The high is right here at 140.88. So maybe we see a little bit of a pullback from there. Momentum still bullish. RSI is still bullish. We'll see how it plays. And then looking at semis, this kind of looks awful, to be honest. You can see a high, lower high forming, selling off, big down candle, 7.48% down. Broke this trend, broke the consolidation of EMAs and VWAP in here around 242 to kind of 245 in here. Closed below all of that. My next support, 228.93. It's been basically a rocket ship in this channel for a long time. We have been below that trend line before, but realistically at this point, I would say this is probably going to pull back down to that 55 EMA down at 219.63, just below that highly traded zone. Maybe it trends up a little bit here. 222.30, somewhere in there. Momentum bearish, RSI bearish. Looks like this is rolling to the downside. Moving over to wood and oil and gas, you can see wood did sell a lot, 2.5% down to this trend line here, broke back into this range, momentum bearish, RSI bearish. This is signaling some weaker economic conditions, and I do think that's probably going to go a little bit further. Let's go ahead and extend that out. You can see this next trend is in the 76.50 area. See how that plays out. Maybe this becomes sideways consolidation a little bit more. Get those EMAs and SMAs to consolidate between 79 and 81, somewhere in there, and get a bigger sell from there. And then looking at oil futures, selling off back to that 66.50 level. Seems like oil is selling some more, kind of in line with the dollar, to be honest. This chart actually looks very similar to the dollar, except that it's moving in the opposite direction. The dollar just continued to rocket up from here, whereas oil and gas is moving quite a bit lower. If this zone breaks, I'm going to have to add some levels. It's been a long time since we've been below here, but see how it plays out. Makes sense. Oil is forecasting some more supply going into the markets with the Trump presidency, bringing those oil prices lower. Moving over to 20 and 50-day breadth. Both of these were down quite a bit, about 15% each actually. Momentum still flat, did not step to bearish, whereas the 50-day breadth actually did get the continuation lower. RSI rejecting off the SMA, that's kind of what we thought was going to happen. Came up, retested, continuation lower. That is what we ended up getting. We're back into here. Current support, 51.75. We'll see if it sells through there. My guess is that it probably does. I did add a trend line. You can see fairly consistent lower highs. Seems like another one here. And then similarly on 50-day. Lower high, lower high, lower high. Sell was a little bit more dramatic. More of that previous week's candle. The 20-day held up okay, but 50 seems to be breaking down. Momentum, like I said, bearish. RSI bearish, at least down to the 50 area. But realistically, I would expect a lower low, probably into that 40 area where we bottomed out back in June into that July timeframe. Moving over to 200-day breadth, you can see that breakdown below the trend here as well. This is the trend we were watching. We broke out, kind of consolidated above it, and now we're back below it, below all these short-term EMAs and SMAs. The trends seem to matter a little bit more here on the 200, kind of holds in regions a little better. You can see how that kind of plays. Grinding up here, holding out, and then once you start to break structure, it goes quickly. You do get trends that matter more. And right now, it seems like these are breaking to the downside a little bit more towards that 200 SMA down in the 60.94 area, 62 potentially as a level, 58.90 in there as well. But realistically, this could head back down to this lowest trend line, which would be all the way down in the 57 area. We'll see if it does that kind of a move. Momentum bearish, RSI looks awful. Breakdown couldn't even quite get the retest. Continuation lower. Price in that same region looks like it's going to sell some more in my opinion. So 200 signaling some more bearishness to come, at least to that 64.74 level. Moving over to bonds here just for a moment, I want to show that these have been ridiculously strong. Momentum is still very, very bullish on bonds. 10-year yield continuing to go towards that 5.5 area. Ridiculously high. I don't think it deserves to be anywhere near there, especially the 2-year. The 2-year should be closer to 3.5. In 2 years, I would expect the actual interest rates to be back in that range. But the bond market thinks right now the economy is going to stay strong enough that the 2-year yield is going to be 4.3%. I just don't think that's accurate. I think this is going to pull back here. And then once it starts to go, I think that should prop up equities a little bit. But for right now, yields are staying quite high and remain quite strong in this current move. Moving over to the dollar. Dollar continues to be a rocket ship. One of the strongest weeks. Again, 1.64%. Had a huge week here, 2%. Grinding. And then another spurt. Big move right to that level, 106.83. It's not seeming to get above that level. You can see that was an important level back here. September through October last year, consolidation there and then broke. We'll see what happens. Is this the top? Interestingly, there was another very, very strong move with a whole bunch of up candles in a row. See if it has a move like that, consolidation, pull back. Or here again, we'll see what happens. Consolidation, maybe it pulls back a little bit, gives equities a little bit of room to grow and go a little bit higher. But for now, the dollar just looks very, very strong. We'll see if it pushes up to this trend here, somewhere in that 107.3, maybe in the 107.5 area, somewhere in here. Moving over to TLT and JNK, you can see JNK actually held up at that 21 EMA, 96.19. Low of the week was 96.14, overthrew it just briefly, but now this looks like a high, lower high. See if this continues to fall here. 21 EMA has been support. Go ahead and extend out this trend line here. If we continue to fall, that would be your next support trend-wise in the 95.30 area, 95.61, somewhere in there. Realistically overthrow to the trend though. 55 EMAs all the way down at 94.79. Seems like this is probably going to go a little bit lower. And then TLT, another bad week, 2.6%. Support right now is that 89.16 area. Same low as here. Realistically, it should be a high, higher high, low, higher low, potentially. But right now, momentum bearish, RSI bearish, big selling volume on those candles. So TLT likely to continue lower based off the indicators here. And finally here for the VIX, up 8% on the week. Did overthrow to a lower low, did touch the highs of this consolidation. The low of the week was 13.59, ended up bouncing pretty strongly. I think this has a little bit more to the upside. I want to see the 18.50 level tested, 20 level tested, then we'll potentially get a rejection from there. But at least for now, I think this is going to go higher. It's interesting to see the momentum not going with it. Momentum says a little bit more bearish, but I would expect this to roll up, step sideways, start to swing towards bullish. Maybe we get a little bit more in it. And then moving over to my accounts for the week, I ended up losing about $800 or 0.6%, which is not terrible considering the NASDAQ was down about 3.25. So made money last week, didn't lose it all this week, so pretty much in line with markets. Overall, not a bad week. And then current positions, 228 put for the Tuesday, 494 put for the Qs for the Monday. I think we're going to get a consolidative style Monday, sideways choppy action, pull back in time style move. Even if we get a continuation lower, I think we kind of consolidate Monday and then continue lower. So that's what I'm looking for. Obviously, if we rally up, I'll be in good shape. If we do get that continuation lower, I'll take these positions off. So looking for sideways choppy action, likely to go lower in the short to medium term. Let me know down in the comment section what you think of the CAPE ratio and the potential for bonds to outperform over the next 10 years, or are you still buying equities, buying growth stocks? What do you think for your investment future? Otherwise, like and subscribe. If you got any value out of this video, make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.